Hi, this is Bill Wood with Disciplined Trading Decisions, and this is a short video to go over this pre-market planning sheet here. When you receive this, it'll be in Excel format, and one of the first things you may need to do is to adjust some of these columns here. I like to print this out and do this by hand, so it will take some finagling to get this to fit onto a piece of paper. So you may need to change some of the fonts or something to make it all fit, but it does fit. So you can change anything in here. It's all accessible to you. Sometimes when you go to change something in here and you click in here and it doesn't show up correctly, you may have to click all the way to the left and edit it that way. So starting from the top, I got the day and date. The market, I wrote in here ES, could be anything that you want. And I like to write down some of the announcements. Just write that in this area here. And generally at the end of the day, the P&L. So in this section here, I'm just trying to get the odds. What are the odds of this being a neutral day, a negative day, or a positive day? First, I start off with the trend and the age of the trend. So on the monthly, let's just say that this was the S&P 500. The monthly trend is obviously up. So I would list that as a positive. I just put a little check mark in there. Then this section says, is it balanced? Or is it was it out of balance and it re-entered balance? Or is it a breakout? Or is it a breakdown? Breakout is up, breakdown is down, of course. Is it one time framing higher or one time framing lower? Or has the one time framing stopped? So let's just take a look at this on the daily. Let's say that I was filling out the daily part. And so here I could say that it was one time framing higher. Each low, it doesn't, the highs doesn't matter when it's one time framing higher. Each low is higher than the previous, right? And then on this day here, you can see that it stopped. It was one time framing higher through here, and then on this day it stopped one time framing higher. When it's one time framing lower, right, from here to here to here, this would be a stopped one time framing. So the stopped one time framing, that's all that does, is it tells you to become alert. It doesn't say to jump in and trade. That is not a trade. It is just telling you that something has changed in the market. So of course, on this day, if I was filling out this paperwork, I would say that this was a breakdown, right? Major breakdown. So like I said, I fill this out by hand. So I would, on the monthly, I would say that the trend is up, that it was positive. But on the daily, I would say that it was that it broke down and that it was negative. And if it's in balance, right, I'll mark it as neutral. Okay, the volume. If let's say that something important has happened, like the breakout on the monthly, one of the notes that I was making was that on the monthly, this breakout right here was not on very good volume. We had this consolidation here. We broke out on this bar, and look at the volume. It was not very good. So when I'm filling in my paperwork, I'll make a note of that. You know, it looks positive, right? But the volume was low, so that would be a negative. I would mark that as negative, and then I would fill in some of my thoughts here. Then this part here goes over the market profile. So the first thing I want to see is the is value moving with price, or did it not move with price? And did it move higher or lower? Or is it balanced? So on the market profile, that would look something like this, and we're just talking about the value areas right here, and that's these shaded in areas here. So you could say that, you know, this was this value here was overlapping to higher, but it's pretty much balanced. Let's say that price moved all the way down here, but the value was up here. I would say that it did not move with price, and I wouldn't necessarily say it here. This is a different, little bit different situation, but when it obviously moves without runs ahead of value, you want to make a note of that, because generally it will come back to value. Okay, so that's there. Previous day's inventory. Just as far as inventory, you look at this, I would say that this market is short. But the only, and usually when it's stretched out like this and has gone too far and moved beyond value, then it's extremely short. This may be short on the short time frame, but we have a lot of inventory to work off here, so it may go lower. So I'll just take that into consideration. So previous days inventory, was it short? Was it short covering? Is it balanced? Is it long, or is it long liquidation? So I believe what we have here in this situation is long liquidation. All right, what else? Structure and repairs. All right, we have excess high and low, poor high and low, weak high and low, spike. Okay, so a good high or low is like this is a good high. You want excess, right? A poor high is something like this here, where you don't have any excess. I don't know if you can see that real well, but both of these are poor highs, okay? Because there's no excess here. So generally poor highs are revisited. Now when the two bars equals the same amount, that's a weak high. There are a little bit different stories behind them. Poor highs are generally getting long or getting short on a short time frame, and weak highs are generally mean that you're dealing with short time frame players, and that they're not necessarily going to hold the market. Okay, next, structure repairs, elongation, prominent point of control, 45-degree line, a P or a B formation, or anomalies. So like in this situation here, we have elongation. Generally, elongation is revisited and repaired. We have anomalies here. It's not real smooth. You have these little jet out areas. Generally, they are repaired. A prominent point of control would be maybe like this, where like almost every 30-minute bar crossed that one area. Like this is a prominent point of control. And generally prominent points of control are revisited. So it could be a long time before they're revisited. Don't, that's not a trade. It's just information that you carry forward. So the next, let's see, 45 degree, that is, see if I can find that here, 45 degree line. Generally, there's not a good explanation of what that is here, but I'll give you, I'll show you this one to kind of point out what I'm saying here. So most of the trading happened here, and then later on the day, see that the 1, 2, 3, 4, later on in the day, all these people sold at poor prices. This is the fairest price to do business for that day, and these sold at poor prices. That means that these people may be getting short, and that this is actually where value is, and so it may come back to where value is. And you see, it didn't happen on the next day. It may not happen at all. It's not a trade. It's just information that you carry forward. So next here, we're looking at the carry forward idea, and this is where you would, this is where like I'll circle, okay, maybe inventory is getting too short, and so what would that do to the market? Then I would expect it to go higher. Or let's say that a very important reference is just below us, right? And so I think that that may carry the market lower. And I'll just use these little bars as to make my arrows. So I'll circle the reference and then put a little arrow next to it. Overnight inventory basically goes from the close of the previous day. If most of the trading has happened below the close of the previous day, then that inventory is short, and that inventory is weak hands in the overnight session. So oftentimes it will correct that inventory. Now we're getting into the beginning of the day. So is the opening going to be in the center of the profile, on the low part of the profile, on the high part of the profile, or is it going to gap? And is that gap going to be close or wide? If it's a wide gap, it's more likely to just gap and go. If it's close, then it's more likely to visit the previous day's high or low, depending on whether it gapped higher or lower. Scenarios, this is where I kind of plan out my scenario for the day, how I'm going to trade it. I have approximately 7 scenarios. If the market gaps wide, then I have a scenario that I think that's going to play out, and I'm going to be looking for that to happen, and I'll write it out here. And I may even comment, do I think that it's going to rotate, or look like if it opens in the lower part of the range, will it look out and fail, or look out and go, or look, if it gaps open, will it look in and go the opposite direction? Or that's what these mean. And REB always means re-enters balance. Now this lower part is what I fill out while the day is going on. Did it open in the combined HVN? If you take all of all the information that's on the chart, or the last week or the last month's high volume node, is it opening in that high volume node or out? Is it north or south of it? Is it opening in yesterday's range? So if it's opening out of the high volume node, and it's say to the south of it, and do I think that I think that, and it's an initiative move. It's not heading back up toward it, but it's heading away from that high volume node. An initiative move, it may just open up and go. And so I'll write down what I think these things will do, and then I'll fill them in as it does it. Do I think that the market's just going to stay where it is and grind, or balance? So who is in control? Is it an initiative move away from balance? Initiative buyers or sellers, or is it a responsive move, moving back into balance? You trade those days differently. I'll write in some levels in here, high and low volume node, supply and demand zones, support and resistance, highs and lows, and different levels that I believe is important. And if I get an idea of the target, where the market is heading to, I'll write that in there. What's the market trying to do? Is it doing a good job or a poor job of it? The overnight inventory, did it correct the overnight inventory? I keep stats of that. The overnight stat, did it break the overnight high or low? I keep that stat. The area that I thought it was going to reach, did it reach it? And if it did reach it, did it accept that area, make balance there and bring volume up in there? Or did it reject that area? Or did it get close and just miss it? That will give me a new target. Or did it just go right through that area and just ignore it? It just blew right through it. What's the confidence? High, medium, low, excessive, who's in control? Because this can change during the day. And like I said, I do this while the day is going on. Who's control? Is it initiative, away from balance? Is it buyers or sellers, or is it responsive? Was there a move and now it's heading back? What's the tempo like? What's the conviction like? If tempo is slow and conviction is not that strong, then I may be playing an outside-in day. If it's responsive, I may be playing an outside-in day. If it's initiative and strong, I may be playing an inside-out day. In the first couple of 30-minute bars, does it look like value is going to be unchanged? And let's say that it opens up way out of yesterday's value. What would it take for value to get unchanged? Well, it would have to make a strong run back to the previous day's point of control and then balance there. Or if it is balancing and value has not changed, what would need to happen for it to change? So the high, is the high a good high, or is it a poor high, or is it a weak high? So it may be a good high in that it left excess, but it may be a weak high because it hit a reference at an exact point. The low, same thing. Inventory, are we getting long? Are we getting short? Do we have single prints going on? Are there any targets there? Okay, the next one is the initial balance. That's the first hour of trading. What happened during that first hour? Was it a trend from the open to the end of that first hour, or did it go down to a reference point and reverse, and now it's going in the opposite direction? Has it just been rotating all that time? Is it a narrow, or is it a wide, initial balance. And then after the initial balance has happened, is it extending to the north side? Is it extending that initial balance to the north side, to the south side? Is it just nested in between, causing balance? Is it trending? And is the Gaussian shape, is it, very thin, or is it becoming very wide? Or is it a double distribution? You can have some up here, and then market comes down, and then you have another distribution like that. I think that's pretty much everything on here. You can open this document up and change anything in here, and ask yourself questions that keep you alert, and just fill this out as you go. And like I said, you can I print this out and do this by hand. So I hope this was a help to you. If you have any questions, you can leave a message on YouTube, or you can email me at support@disciplinedtradingdecisions.com. So again, I hope this was of some value to you. This is Bill Wood signing off, and remember to stay motivated, stay focused, and stay disciplined, my friend.